It's not just tech that's in Beijing's crosshairs. The Chinese EV stocks, the electric vehicle names, are sinking after the nation's industry minister called for consolidation of the sector. This was an interesting one. He said that there were just too many EV makers. Usually it's the opposite problem. It's market concentration people don't like. This time it's proliferation. And shares of Soho China, which is one of the largest property developers, are plunging in Hong Kong trade, down about 35% after a takeover deal fell through, with the Blackstone Group backing away from its $3 billion offer. Michael, which of these is the more significant event for you?
The Blackstone deal is not a huge deal. Blackstone basically just thought wisely to not invest in China right now. I think really basically the government going in and saying that they're going to impact the free market. They're essentially going to say, we're going to have a certain number of competitors and maybe 300 is too much. You're absolutely right. It's just like when they say Alibaba is too strong, they say essentially all of these EVs are too weak and they need to be consolidated. So the government has a master plan here, a master plan that only they know, and that is what is going to be implemented. You know, back to Alibaba just really briefly, if I could. It didn't get much press, but Alibaba essentially, quote unquote, volunteered to give 100 billion yuan, which is, how much is that? That's like 13 billion US dollars, a third of their cash.
Wow. To
basically Chinese social initiatives. I say volunteer.
In quotes.
Not really volunteer, but it was highly suggested. When you have that sort of government intervention in the free market enterprise, it makes it very, very difficult for companies to operate in a free market way. And it certainly is going to make it difficult for investors on an outside basis to really decide what these things are really worth.
And Molly, it will just be fascinating to see, okay, is this forced consolidation, for example, in the EV space? China's EV innovation has been quite good. I mean, this is a huge opportunity. If they get it right, it's a huge missed opportunity for the U.S. So it's strategically vital, not to mention the supply chain that goes into making batteries and EVs and all the rest of it. So this is a huge gamble they're making.
It really is. And I mean, I think we have to say this has never been a free market, right? Yeah. We have sort of gotten the impression that it might be. It certainly has never been. And now China is putting its thumb on the scales in all kinds of ways, maybe saying, look, we would like to pick a few EV winners for various reasons, political and otherwise. We would like to put all of our capital behind them and make sure they're a success. And it's easier to control 10 than it is 300. So it could be successful in terms of propelling 10 or more EV companies to, great heights and really succeeding at this energy transition that China has started. It could also fall on its face, though, because we don't know what this style of sort of government capitalism is going to look like going forward.
Yeah. And so, Matt, I could ask you about the impact on a number of different stocks. I mean, we haven't even mentioned the big U.S.-China multinationals like Apple, like Starbucks, which obviously, if the Chinese government is interested in jobs, they seem to not want to mess too much with. But sticking, for example, with just the EV space, Matt, what would you do with a name like Tesla as all this is going on? I mean, if people can't really figure out what the market there is supposed to look like, then what do you as a trader want to do with the names that might be most exposed to that?
Well, again, there's so much uncertainty because you really don't know what's going to happen. What's their next move going to be? So it just makes it very, very difficult. Now, obviously, China is very important to Tesla, but Tesla isn't totally dependent on China, so it's not pure China play. But you also have this issue as well with what is China doing in terms of are they really trying to de-risk or de-lever their economy? How much do they want to do that? I mean, you talked about Blackstone backing out of that real estate deal. I mean, we see what's going on with Evergrande, is it Evergrande or Ever?
Yes.
These guys are smart guys. I mean, remember they were a private company for 25 years, and then in the summer of 2007, they sold themselves to the public, and 3 months later the market topped. They see what's going on in China in the real estate area, and I think it's more of a deleveraging issue, and it really does raise some concerns.
Right, and a lot of us who have seen ugly deleveragings are wondering if that's what this is, just how elegantly they can pull it off. All right, we will turn our attention back to the U.S., where old tech is pretty hot this year in terms of performance. Goldman just reiterated Dell as a buy, adding shares to its conviction list, saying strong cash flow and a clear roadmap for paying down debt are reasons to be bullish. Dell's up about 35% this year, and Goldman sees about 40% more upside. Cisco is also up 30% this year after finishing 2020 in the red. Its shares are getting a boost from a rebound in IT spending as offices reopen. Anecdotally, traffic is definitely heavier. Cisco holds its investor day on Wednesday. Oracle is also up about 37% this year and reports today after the bell investors are hoping they can build on last quarter's revenue growth. I'm going to reverse the order. Start with you, Matt. Would you be a buyer of quote unquote old tech here?
You know, I really like this play. I mean, because one of the things is that we saw last week a little bit, or recently, with the stock market, getting a little bit more volatility, and yet people went into the kind of first, one of the safety trades was actually the big cap tech names, but they're very expensive and they're very overbought on a technical basis. But if you look at Cisco and you look at Dell Computer, I mean, here's these stocks that are, I mean, Dell's actually down from its highs in April, while these other names, the big cap tech names, are up 10 to 15, even almost 20% for Google. So a better play. But not only that, Cisco pays a 2.5% dividend. None of these other mega cap names offer at all. And Dell, which has great cash flow and is talking about entering a dividend there, initiating a dividend, could be a good play here. So if you're looking for a safety in the tech area with what's going on with inflation and such, these could be the better play than some of these mega cap tech names that, again, are expensive and overbought.
All right, Molly, I'm going to save you for Apple. So, Michael, I'll give you a quick final comment if you want to respond to that on where you would be advising people, old tech versus kind of growthier tech and all of that, and with the cyber disruption that has happened with a lot of these cloud names.
Yeah, I think more conservative tech, whether you call it old tech or you call it cash flow tech, I think is really the way to go if you're going to be a technology investor. So you have many names that, such as the ones that were mentioned today, as well as names that, going back to the China theme, that actually can take advantage of still what's going to happen in China, which is going to growth, which is technology multinational. So I think having technology in portfolio strategies certainly makes sense right now, and I think that the so-called old tech or more traditional tech, some of which were mentioned, I think makes a lot of sense in portfolio strategies.
All right. Very, very interesting. And we look forward to hearing from those results tonight. Now, finally, it is a big week for Apple. We, of course, had Epic Games just filing an appeal of last week's ruling in that California court battle. They asked the higher court to re-examine the Apple Epic case. I think I said that Epic Apple case. Anyway, that saga is ahead of Apple's annual product event, which is set for tomorrow. A new iPhone is expected, maybe some updates to the AirPods, the Apple Watch. As of January, guys, there were 1 billion active iPhones and 1.6 billion other active Apple devices in use around the globe. Molly, what do you think the most significant aspect of this launch is for investors?
I am going to say something that might be controversial here. I think that Apple actually constitutes old conservative tech at this point. It really doesn't matter what they put in their new phone. It really doesn't matter what the new watch looks like, right? None of this is going to be a reinvention. And for a lot of consumers, Apple is essentially a subscription service at this point. A new phone comes out 1 or 2 years, they get it. A new watch comes out every 1 or 2 years, they get it. And so as far as investors are concerned, I got to feel like it's a safe bet. It's like the Honda Civic of stocks at this point.
You know, I don't think that's quite what they're going for. All right, so Matt Maley, if Apple's launch event isn't going to be the most dazzling, exciting thing that it was maybe 10 years ago, what would be? I mean, who has stolen the thunder? Is it Tesla talking about Dojo and having AI Day and all of this stuff? You know, where is the market's enthusiasm, Matt, if it's really not around Apple anymore? And again, I'm not talking about the performance. The shares obviously have done fine.
Well, it's funny because, you know, remember in 2019, people were saying, oh, my gosh, Apple's old. Forget about Apple because there's no innovation anymore. But as Molly says, they just, bring in the cash hand over fist. So it's still a great play. One thing for Apple down the road, and it's not going to be something immediate, though, and you had one of your guests earlier today on CNBC talk about the smart glasses. And there's a company called Microvision, who everybody talks about their LiDAR technology, but they also have a new technology for the screens that will allow us to have glasses that don't look like they're from a 1950s sci-fi movie. They'll actually look like regular glasses. So this is something Tim Cook, I think, down the road looks like it's going to be something, their next new big thing. But again, that's not going to be coming in the next year or so. But look for that in the years to come, and you'll still be paid to wait very nicely with the amount of cash that they bring in.